the impact of these higher prices?
So I'm sure they are today, right? Typically, airlines will buy fuel forward, I think, a couple of weeks. So we've been sort of enduring this at least for what about a week now? Yeah, so maybe they're just starting to buy fuel at higher prices, but it had inched up before fuel prices really popped recently. So I think again, I think they're probably already experiencing some of the pain. U.S. airlines don't hedge. They haven't hedged for a couple of years. A couple of holdouts on that was Southwest, Alaska. JetBlue used to hedge a little bit. A lot of them have gotten rid of their hedges. I think a lot of them thought, look, there was a lot of cost in hedging, and many times those costs weren't needed. And so, since I think the broader group of U.S. airlines don't hedge, they all feel like, look, my competitors will raise prices pretty quickly as fuel prices rise because it's an important part of their cost base, and so we'll do the same. Why bother being in the hedging markets and try to predict where the price of fuel and the price of oil is going?
George, if oil prices continue to stay elevated and start, prompting airlines to lift their ticket prices, do you see that substantially weighing on consumer demand, or has the post-pandemic travel boom kind of been enough to offset any potential headwinds to demand?
No, I think, anytime you see a higher price for any product, you're going to typically lose some level of demand, right? And so right now we see a couple percent growth in 2Q and 3Q for U.S. airlines in the domestic market. I think if you stay elevated here, for fuel prices, I think they're going to have to knock that capacity increase out in order to try to solidify fares. Because, what they'll have is that they'll have a higher cost base, and then they're going to they'll raise fares. And I think they won't be able to keep that same amount of capacity in the marketplace at that fare level. So I'd anticipate they would knock out some of that growth because, again, the higher price for anything, the less gets consumed. And we're already seeing a little bit of a challenge at the low end U.S. consumer. I think that's some of the problems we've seen with airlines like Spirit and Frontier. This kind of exacerbates that problem. So I think you'd see less capacity in the market.
I was checking online. One economy class round trip ticket from Sydney to London has increased by more than 80% over the past 2 weeks. So talk to me, though, George, quickly about who's best positioned right now. Who has the healthiest balance sheet to sort of weather this storm when it comes to higher oil prices?
Yeah, if this challenge stays around for a while, it'll be the healthiest airlines that survive and do well. Delta. Actually, Southwest has the best balance sheet in the marketplace. Delta's got a very good investment grade balance sheet. United's on the way to that. Some of the more challenged are sort of JetBlue, Frontier, and Spirit Airlines. I think you continue to see this trend of the big full service carriers being outperformers here, given I think their customer base less sensitive to higher prices, and a number of them have had pretty good years now, and the balance sheets have improved pretty nicely. Unfortunately, I think American not as good as United and Delta in that group.